The Bank of the Lao PDR or BOL has informed key stakeholders of the objective of its credit policy in order to stimulate economic growth as part of the implementation of a resolution of the National Assembly. A meeting to outline the objective of the policy was held at the Prime Minister's office on Tuesday, chaired by the Governor of the Bank of Laos, Dr. Bunlea Sinsay Wolawong. The credit policy focuses on the production, trade, and services sector, which are crucial for replacing imports, promoting the export of domestic goods, creating jobs, maintaining macro financial and monetary stability, and economic development for sustainable growth. The specific objective of the policy includes creating conditions for businesses in priority sectors of the state to access source of capital. The report from the Bank of Laos showcased that the credit policy to stimulate the economy is divided into two sub-policies: the credit policy to fill the interest hole and the credit policy to distribute capital sources to local areas. The credit policy to distribute funding to local areas will be dependent on the source of loans, such as using funds of the Bank of Laos for amounts of up to 1,500 billion ki for a period of not more than 5 years. The funds from the central bank will be allocated to commercial banks with an interest rate of 3% per year, while the commercial banks will provide loans to businesses with an interest rate of 5.5% to 6% per year. The policy's interest subsidy is set in the GIP currency. In cases of lending in foreign currency, the consideration of interest subsidy will be done in the GIP currency only. Under the credit policy to fill in the interest hole, loans will be provided to 4 priority sectors: agriculture, forestry sector, 40% of the policy funding; industrial processing sector, 25%; services, tourism, and handicrafts, 25%; and the trade commercial sector, 10%. According to the plan for the credit policy to distribute funding to local areas, Vientiane and the provinces of Savanakhet and Champasak provinces will have access to 100 billion kip each, and the provinces of Phongsaly, Luang Nam Tha, Udom Sai, Bok Kaeo, Luang Prabang, Sayaburi, Hua Phan, Sieng Khwang, Vientiane, Bole Kham Sai, Kham Muon, Salawan, Sai Kong, Attapeu, and Sai Sambun will get 80 billion kip each. Micro, small, and medium-sized enterprises and a number of large enterprises in priority sectors will be able to benefit from the credit policy to fill the interest hole. Micro enterprises, small and medium-sized enterprises in priority sectors that have received technical and comprehensive certification from relevant sectors of the province will be qualified to benefit from the credit policy to distribute funding to local areas. The conditions for funding recipients stipulate that an enterprise must not have non-performing loans or NPL and have a clear and precise business plan. Domestic commercial banks that can take part in the project include state-invested commercial banks, joint venture state commercial banks, and domestic private invested banks. Bank of Laos is currently establishing several committees to implement these sub-policies at the central and provincial levels, and to create regulations, measures, and principles that can be used as references for the practical implementation of the project. The meeting was attended by ministers from line ministries, deputy governors of provinces, and the mayor of Vientiane.